ಎಲ್ರಿಗೂ ನಮಸ್ಕಾರ. Hearty welcome to Jnanarjane Empowering Excellence. Friends, today we have arranged a very special meeting. We can greet our newly elected council members, also GST reconciliation, tips and tricks. Friends, after a gap of 3 years, Bangalore got a central council representative, a person who has dedicated his prime 18 years of profession to the cause of profession, represented as a chairman of Bangalore branch. He served 9 years in Bangalore branch and another 9 years in SARC, Southern India Regional Council. In both places, he held the position as chairman of Bangalore branch and also chairman of SARC. He won this term Central Council election. Hearty welcome to CA Venugopal. Please come on, guys. Friends, we have our one and only Bangalore Regional Council member. She also is the second term in SARC. She served as chairman of Bangalore branch. Again, she served 6 years in Bangalore branch. She won the SARC in both the election highest number of electors vote. So it's a real achievement. So on behalf of Bangalore branch and on behalf of all the participants, hearty welcome to Vikram. Please come on, guys. Friends, today's session speaker, a technocrat, chartered accountant. I consider him as a technocrat because he is an expert in almost all areas. He developed some of the softwares also for CAs to make the things easy, particularly the GST reconciliation, filing, so many things. I am not fully aware of what all things he did, but he is a technocrat. Venugopal Ji, and we are a Bangalore branch. He is going to enlighten on GST how to reconcile. Let us welcome all of them with a flower bouquet. Hearty welcome. Friends, you are the reason for this program. Hearty welcome to each one of you. Today, as I already mentioned, an important day, both in terms of learning and meeting our members. Now I request our Geeta Madam, our SARC member, to address the members.
Dignitaries on the dais, Chairman of Bangalore branch, CA BT Shetty, Vice Chairman, Central Council Member elect, CA Srinivas sir, and today's learned speaker, CA Venugopal Gella sir, and my dear colleagues. Good evening, each one of you. It gives me immense pleasure to stand in front of you as a winner of the recently held SARC elections with highest mandate. And it's my pleasure to be here to receive this felicitation and compliments from my own members from my home branch. I think most of us are busy with their hectic schedules by meeting their deadlines in filing the income tax returns amidst the elections, and now there is a little bit of relief. Of course, tax audit season already started and people become busy with it too. And it wouldn't be exaggerated if I state that I have received overwhelmed support from my professional colleagues throughout this election journey that has reinstated confidence in me, and it made me to strive better and to deliver better. So when someone bestows trust, we know very well that trust comes with responsibility. So I promise that I fulfill my responsibility that entrusted on me with the greatest potential. Never settle for less. This is my mantra and guiding force that motivates me to keep me updated and to keep learning continuously to enhance my abilities. So I am deeply obliged to one and all who helped me or who contributed to my success directly or indirectly towards making me to realize my potential, what I am today, and guiding me throughout. So with this, I would like to conclude because I know everyone will be waiting for our Central Council elect to speak, because after a span of 3 years of a gap, we have our own Central Council member from Karnataka. So with this, I'll conclude. Thank you very much.
Thank you very much, Madam Geeta. All the very best for your future endeavor, and we expect members from Bangalore expect a lot from you. So I'm sure you are going to deliver all our requirements or demands. With that note, once again, thank you very much. Now I request our Central Council elect CA Srinivas to address the members.
ನಮಸ್ಕಾರ. ಸಭಾಂಗಣದಲ್ಲಿ ನಡೆದಿರ್ತಕ್ಕಂಥ ಎಲ್ಲ ಲೆಕ್ಕ ಪರಿಶೋಧಕರಿಗೂ ಹಾಗೂ ಮಾಧ್ಯಮದಲ್ಲಿ ಇರ್ತಕ್ಕಂಥವ್ರು ಥ್ರೂ ವಿಡಿಯೋ ಕಾನ್ಫರೆನ್ಸಿಂಗ್ ಎಲ್ರಿಗೂ ನನ್ನ ನಮಸ್ಕಾರ. ಫಸ್ಟ್ ಆಫ್ ಆಲ್, ಲೆಟ್ ಮೀ thank the Bangalore branch and especially the chairman of Bangalore branch, B.T. Shetty, for inviting me after getting elected to the Central Council. Thank you, Chairman. Other members on the dais, the member from Bangalore who got elected to the Regional Council with the highest number of votes, Geeta, congratulations getting elected with highest number of votes. It's an achievement in itself, so she should thank all the Karnataka members for supporting her. Also the today's speaker, we have my good friend Venu, who will be taking us through some of the provisions of GSTR 9 and 9C. Then the other members who have come to listen to Venugopal on GSTR 9 and 9C. In spite of the current due dates for filing the income tax returns, that is on coming week 15th, you have got some interest to learn something on GST. It's a very good move, I should say. Coming to the elections, as all of you are aware, after a gap of one term, that is 3 years, where we didn't have a representation, this time one of the member from Karnataka and more so the member from the Bangalore branch, like myself, got elected to the Central Council. For this particular thing, I should thank each and every member who came for voting First of all, I should thank all those people who came for voting, whether they voted me or someone else, that is different issue. The people in Bangalore who came for voting, around 4,090 members, my 1,000 thanks to each and every one of them. And also the people of Karnataka who came for voting. In fact, as you are aware, the percentage of voting will be very less in the state of Karnataka and more so in the city of Bangalore. That is where we need to see that members will come and vote in large numbers so that we can have a better representation from the state of Karnataka. As such, let me place on record the love and affection that has been bestowed on me from the people of Karnataka and other members of the southern region in electing me to the Central Council for the term 2022 and 2025. As most of you are aware of me, I've been serving the institute for more than 2 decades, right from my student days, then 9 years in the Bangalore branch and 9 years in the SIRC. Now I've got an opportunity to go to the highest level of Central Council and serve the profession. In fact, that's a decision-making body. I will assure you, with my experience and the commitment, I will do the best to the profession to the best of my knowledge and ability. And there are a lot of things that has to be done to the Bangalore branch and other branches of Karnataka. And there will be a lot of things that needs to be done to the profession at large. Let me assure you that once again, that I will get into each and every detail. And there are many areas which we have to address. But as an individual, one cannot take up each and every area as such. Let us take one by one and see that whatever best that can be done, I will do it. And also I request all the members, it's not that when you come for voting, your work is over. Maybe I need a lot of inputs from you people, how to get into the major issues or what are the things we have to do for the benefit of the profession. So I expect a lot of inputs from the members, whether it is with respect to the membership, whether it is with respect to the student activities or with respect to the profession as a whole. So I need your inputs. And once again, I thank Bangalore branch for organizing this meeting and inviting us to meet and say a few words about our intentions, and also thank the entire membership at large for electing us to the councils. Thank you once again, and of course, I'll be meeting you in regular intervals throughout the next 3 years. Thank you.
Thank you very much for your address to members. And yes, we felt the absence since last 3 years. I really felt that that is fulfilled now. So definitely the upcoming chairman and future all the chairmen of Bangalore branch will get the best support from the Central Council. So there may be many other issues also. Definitely, I'm sure, since you have a lot of experience and you are able to understand what exactly the pulse of the members, what they expect, you can easily understand since you are there since 2 decades, almost 2 decades or more than 2 decades, you served the profession. So definitely we can expect a lot from you. Thank you very much. All the very best for your future endeavor. So let us felicitate them with a shawl. Thank you very much, both Kutaya Srinivas and Madam Geeta, for accepting our felicitation. Friends, today's next agenda is GST tips and tricks how to reconcile GST in a very short span of time. Yes, in the midst of this tax audit, we have arranged this GST reconciliation because while you concluding the balance sheet or signing the balance sheet, the reconciliation also is a necessity. So at this time, I think if you are able to understand any of the shortest time available, maybe another 10, 12 days, you have to finalize 3CD and file. At that juncture, in a short time, maybe 10, 15 minutes, 20 minutes, half an hour, 1 hour, if you put and reconcile GST also, that really adds value to your clients. So in that regard, we arrange this program. And for this reconciliation, the person who has really able to give tricks and tips how you can reconcile in a very shortest time available. So he is none other than CA Venugopal Ji. As I already mentioned, he is a technocrat. He has very good experience in this technology. He uses the Excel and he automated reports from accounting and financial applications. And he's a rank holder in CA. He is a regular speaker in all the forums of ICAI in branch SARC in various other forums. Once again, hearty welcome to Venu. Now I request Venu to take it over.
We can start. Yeah. Very good evening and happy new year to all. And there are a lot of people watching online. I'm happy that there are people, in spite of the tax audit busy schedule, there are people here and online. And when this session has been given saying that simplifying GSTR 9 and 9C for filing, very soothing to ears, a kind of an interesting topic. So question that came up is, can GSTR 9 and 9C really be simplified? Honestly, the answer is no. Okay. Now you would be upsetting that, the topic itself is simplifying 9 and 9C and with the opening disclaimer saying that nothing, it cannot be simplified. See, when the form itself has been given, that this is the form, I cannot cut corners and say, fill something. But however, The best way to simplify or to get tips and tricks to file is knowing all about it. See, once if someone masters something, then for them everything looks simple. Alva. Only when something, first time when someone are doing, it looks complicated. Like there are many people who was practicing VAT. For them, VAT 240 is very simple. But you ask them to file ST return, it looks complicated. There are so many forms, LLO there. Or their experience in filing VAT 240 Karnataka. But someone you have to file, say Delhi VAT, somewhere back of the mind, okay, am I doing right? Am I doing everything correct? Is there something mistakes I'm doing? So all those doubts would come up. So if I have to honestly answer, the best way of simplifying is getting to know the content of it, context of it. If we get hold of that, then rest is completely a child's play. So my focus of today's session is really getting the context of those forms. And this is the 4th year we are filing the forms. So by now everyone knows the content, but there are some, for some it is an annual exercise. So once in a year only we look at it. So it kind need a refreshing thing. So people who are watching online, people who are here, you already have materials with you, pen, paper, make notes, whatever things that come up to your mind. Because I have this habit of directly jumping into some saying table numbers and something, and you'll be looking at, okay, what I'm talking, right? So on this note, what we are going to cover is the legal provisions to start with, so that everyone are in the context. As we are filing, what are the challenges that we face mainly on the outward supply and the tax liability, then on inward and the reporting of it. What are the adjustments that are possible which can be done in GSTR 9, and alongside, as we are covering each of it, we'll be covering the issues. That's the objective of the coverage of the today's session. To start with, on the legal provisions. The legal provisions, we are well aware, section 44 and read with rule 80, where people other than ISD, TDS, TCS, basically a normal taxpayer has to file an annual return. Earlier, along with audited financials, now that has been moved to a self-certified reconciliation statement. So it's a no longer audited financials by audited by SEA, but it is a self-certified reconciliation statement along with the audited financial statements. So that needs to be filed in a specified manner and time. So what's the specified form and manner? GSTR 9 for a regular taxpayers. Composition dealers is 9A. However, 9B for the e-commerce operators, which is not notified, not discussed yet. And the due date for filing of this is 31st December generally, but now we got the extension. So the due date is 28th February. Is it required for everyone? The answer, is the screen changing? Okay, in the online, the screen is not changing. Yeah, for the annual return applicability, it was for everyone. When if you read the plain reading of the act, there is no exemption given in the act. But by virtue of various notifications, we got an option that up to 2 crores turnover, it's your choice. You want to file, you can file. Otherwise, whatever the data which is there, it would be deemed as the annual return. So SSCs whose turnover is up to 2 crores, its annual return is optional. Those whose turnover is 2 to 5 crores, annual return is mandatory. More than 5 crores, along with 9, you will be filing 9C. Both 9 and 9C is mandatory. 9C, it was erstwhile called as GST audit. Now it is a self-certified statement. There are people generally think, okay, if 9C is there, 9 is not applicable. Both are independent forms. So 9 and 9C is applicable if it is more than 5 crores. My turnover is only 80 lakhs. Can I file 9 and 9C? Answer is still yes. Portal does permit to file 9 and 9C even if your turnover is less than the threshold limit. The first simplification or a tip and trick, if you consider, is if you think there are some complications and you want it to be explained, please file 9 and 9C even if it is optional. We all know today the information is freely exchanged between one portal and another portal. Most of us get a notice saying that, okay, 26A shows so much information, so much revenue, but your GSTR 1, 3B or annual return is showing only so much, or income tax return is so much. There are numbers when there are mismatch, you will get automatic notice, and which is all system generated. For system, it has no feelings. So you put some 1 crore records, ask it to process, it processes, generates a notice and sends. Like what is common, we all know is ASMT 10, which we regularly get. 2A credits is so much, but what you have availed in 3B is so much. And by the time when we see our 2A would be showing a different figure, right? So for system, it really doesn't matter. It generates how many ever notices you want. So just because your turnover is less than 2 crores, it really doesn't mean that you should not file. If you feel, say you are in service industry, you have unbilled revenue, you have recognized revenue in the books of accounts are showing a higher number, you file your income tax return, you have raised the invoice, let's say in April month, for the purpose of GST, the turnover is sitting in the next month. If you want to avoid an notice to be replied at a later date, better you can file it now with that reconciliation statement saying that why there's a difference between books and GSTR 9. Choice is yours, it's not mandatory. So wherever you have an opportunity to explain, better you explain, because then the system automatically compares with whatever is the best available information it has. The next thing is getting the context of it. What's the objective of the audit? 2 subsection 13 of the Act talks about audit. A plain reading, if I have to look at from the statutory audit, tax audit or income tax, internal audits, whatever the thing. See, the focus of the audit is to ensure that the transactions that are reported are correct or true and fair. See, no one does an audit saying that, okay, there is a fraud, I am there to discover that fraud. Likewise, even GST is also looking at whether correct taxes have been paid or not. If I have to say, the objective is whether you are complying with the law. Complying with the law means payment of the taxes. And when we say the taxes have been paid, if I have to say mathematical formula for the taxes that have been paid is we are talking about the net tax. So how do we get it? The gross liability minus input tax credit. And how do we get the gross liability? Whatever is the turnover multiplied by the rate of tax. But is it the total turnover? The answer is taxable turnover. So where do we get the taxable turnover? It is like my gross turnover minus exemptions or non-GST, whatever. So my objective is to derive the right turnover and right rate of tax and right tax liability. And when we say input tax credit, are we saying the total input tax credit? No, we are only saying the eligible input tax credit. If we are able to conclude for a financial year that this information is what being sought in the GSTR 9 and 9C, then kind of that, okay, you have done a reasonably great job. So when we look at the forms, you will also understand the forms also have been designed on the same lines. So the objective is to get these numbers right and put it into the right buckets or right place. If that is taken care, everything is taken care. Now, while reaching this or achieving this, there are a lot of information that we have to go through. We have a lot of issues that we have to handle. So basically, though there is no requirement of a chartered accountants to do GSTR 9 and 9C, point is not every SSC equipped in doing it. Or how much ever healthy a person is, Once in a year, they have to go to a doctor, get it their health check done. It's likewise, you did your GSTR 1 and 3B correct in your view as a necessity. But at the end of the year, they would want someone to review it and say that, okay, if there are some mistakes done, I would correct it. Now, is GSTR 9 a place to correct? Let's look at it. But they want you to check it. Check what? Adjustments, if there are something which have been carried are correct or not. Or the rate classification, the rate of tax that have been charged is correct or not. Am I considering all credits? Am I taking all the applicable rules which needs to be done? Everything. I'm complying with all the provisions of the law or not is what they would be looking at various things, right? This is what we also have to consider if we are doing GSTR 9 for someone on behalf of someone and filing. How do we handle all this to say that statement of correct taxes have been paid? Like the objective is the correct tax that needs to be discharged in cash or credit has been discharged. So the point that comes is this a premise to correct my mistakes, or can GSTR 9 be a place to wash off my sins? So when I say sin, is that like I missed out something, I took extra, something happened. Is my annual return a place? So let's get the context of the annual returns right. The issues that can come up is, I said the taxes needs to be paid. Either the tax would have been paid extra or it would have paid less. Credit that I need to avail would have been availed extra or would have been availed less. Or the amounts that need to be reported have been reported correctly, but it is interchanged. Taxes have been paid, but instead of paying CGST, SGST, I have paid IGST. Like these are the kind of adjustments that have happened. So in the course of you reviewing the books of accounts and re-arriving the liability, you have now discovered a new liability. Or you have now discovered that, okay, some input tax credit not availed, or some input tax credit that needs to be availed. So these are the discoveries that you have. So the fundamental question is, can GSTR 9 be a placeholder to rectify all this? Now, before answering to this, let me give you one caution. GSTR 9 is not a place. GSTR 9 is not a place to pay the taxes or claim a refund or avail input tax credit or reverse input tax credit. By filing your annual return, nothing is going to happen to your electronic cash ledger, credit ledger, or your liability ledger. Nothing is going to happen. They are going to stay intact. Now, if they are going to stay intact, and I'm saying GSTR 9 is an information return, does it mean that it has no relevance in the law? So it is like, then what is the purpose of filing an annual return if it is just mere a compilation of what is so? Again, the answer is no. All that I am saying is you can find little difference between GSTR 1 and 3B. 1 is like your information return. The moment you file your GSTR 1, that doesn't mean that your liability gets added to your liability register. You still have to capture that in your GSTR 3B. Only that will be added to your liability register. I might disclose 1 crore as my liability in GSTR 1 and still show only 1 lakh as liability in 3B. Of course, there's a notice that would come up. But if you download your liability register, 1 crore wouldn't be showing as liability. Only that 1 lakh which is there in 3B. Likewise, GSTR 9 is only an information that is going. So GSTR 9 is a place to report. Please note, GSTR 9 is a place to report turnover on which the taxes have been paid and amounts of input tax credit availed or reversed. All these are verbs, actions. something has happened, or it's a statement of fact. Not that what I want to do, but what is so is being reported. So in your annual return, you can only report the turnover on which the taxes have been paid. You cannot report a turnover where the taxes have not been paid, nor you cannot report any liability where the taxes have not been paid. If taxes are paid, it can find a place in the annual return. If it is not paid, it cannot find a place in the annual return. Payment of taxes means we generally pay it through GSTR 3B. But however, there is missed out turnover, missed out liability. How do I pay? There is an additional form which we all know, which is DRC03. So for the purpose of annual return, when you select DRC03, you have the drop down called annual return. Or if you are doing it through reconciliation statement, you have reconciliation statement. So the taxes have been paid means it is paid through 3B or paid through DRC03. But the taxes have been paid. Only then you can find a place for it in the annual return. If those taxes are not paid and still you are reporting in the annual return, as usual, expect a love letter coming from system. So though it doesn't have any feelings, but it generates love letters. And they are all intelligent. How will system know? I'll report in books of accounts 1 crore turnover is there, 18 lakhs liability to be paid. I will report it in the annual return. I don't want to get caught. But system knows that how much you have paid. So there are appropriate tables. That is where I said the forms have been very beautifully designed to capture all this mischief someone wants to try to do by reporting something where the taxes have not been paid or the turnover on which not has been paid. So if you understand the context of the annual returns is the turnover on which the taxes are paid. So you are reporting the turnover on which the taxes are paid. It could be paid through 3B or DRC03, but the taxes have been paid. That's where the chairman sir was mentioning that while you are finalizing your tax audit report, just take additional 15 minutes, 20 minutes, half an hour to ensure that this is the turnover which is going to go to be reported for the income tax, whether that have been paid or not. Let us get a hold of it, right? So having understood this concept, let us now understand the 9C and 9 presentation so that we know whether the right information is being reported at the right place or not. So starting with GSTR 9C, divided everything into parts and various tables. So the 9C is having 5 parts. Part 1 is always about basic information. Table 1 to 4, which here with GST and all those information is reported. Mainly part 2, which is talking about turnover details. It has 4 tables. Turnover details, it has 4 tables. As I am explaining 9C, correlate with that screen which we have seen how to compute my tax liability. And you will find the 9C form very beautifully designed to capture the intention. Basically, my liability has to be computed, gross liability, which is turnover multiplied by rate of tax. Turnover means taxable turnover. How do I get my taxable turnover? Total turnover minus exempted turnover. That's what we have said. So the total turnover is captured in table 5. In table 5, I capture my total turnover. Total turnover from where? Books of accounts. But books of accounts follows AS 9, Ind AS 40, 114, whatever the different standards that are there, the information is captured at a different place. The time of supply under GST is different. So that is where I have said one of the thing is if you find there is a difference between both, you better file your return. So the explanation is found now. So the turnover as per the books of accounts vis-a-vis the turnover you think that should be there for the purpose of GST after making say unbilled revenue adjustment or advances. It is a taxable for GST but not taxable because revenue did not occur, or the valuation, the forex gains, whatever which are not there in the GST but there in the books of accounts. Make those adjustments, derive at your gross turnover in your table 5. Is that the same turnover have you offered to the tax in the annual return is compared? If it is not, the reasons are given in table 6. But the intention was to find out the taxable turnover. To get my taxable turnover, I have to eliminate exemptions. So in my table 7, I list out all the exemptions which I feel that okay, they are not liable to tax. So all those are eliminated and I derive from my table 5, I am eliminating exemptions in table 7. I derive what is my taxable turnover. Again, this is compared always with what do I declare in my annual return as taxable turnover. So I'm deriving from books of accounts. So the context of GSTR 9C, I'm deriving it from the books of accounts and putting it into, is it what there in the annual returns? So if the same taxable turnover is reported, well and good, otherwise the reasons are given in table 8. But the objective is to compute the tax liability, tax payable, whatever is payable and paid. That's what we look at in part 3. Having derived my turnover in table 7, the taxable turnover, I might have reported my turnover properly. 1 crore is the turnover, everything is 1 crore. But the rate of tax at which I have paid is 12% as against 18%. So the same turnover is bifurcated into rate wise in your table 9. So table 9, you give rate wise bifurcation. After bifurcating into rate wise, you compute automatically the tax liability, gross tax liability. Is it what you have actually discharged in the annual return is what you compare. If it's not, we will give the reasons for it. Why is it differing in table 10? Owing to this change in the rate or change in the turnover, non-capturing of the information, if there is a liability, the liability on account of the turnover and taxes is captured in table 11. Right, so very logical. Though the form is not there on the screen, but I want you to visualize that how the flow has been designed. So that's where my gross liability has been captured. Then comes my input tax credit. That's where we move to part 4, input tax credit, table 12 to 16. Table 12 is kind of a reconciliation. Is the credit that you have availed, is it at all there in the books of accounts? It's like a bank reconciliation. So you're taking credit in GSTR 3B. What kind of books of accounts you maintain? Do you maintain on accrual receipt basis? Are you at all claiming this as an input tax credit in the books of accounts or not? Is a reconciliation which is given in table 12. If there is a difference, that is explained in table 13. But we have said input tax credit means an eligible input tax credit. So in table 14, you will list out all the expenditures that are there in the P&L and what is the corresponding input tax credit, P&L or balance sheet or the capex, whatever. What is the corresponding input tax credit against each head? And the very important thing is that an eligible credit. If my credit is 18 lakhs, is whole of the credit eligible is what I report it into table 14. And my net eligible credit that I have availed versus what is so, if there is a difference, the difference is explained in table 15. Now, owing to this explanations in 12 or explanation is which is there in 13 or 15, if you find that there is any liability that is going to come, now liability because you have taken an ineligible credit or credit that's missing, whatever, that is reported in table 16. So the liability on account of turnover and the rate of tax is captured in 11 and liability is on input tax credit is captured in 16. Both these is summarized and said the total tax that needs to be paid is reported in part 5 as additional liability. Feel free to ask questions. Even people who are in the online, you can put your questions and any questions, interrupt in between. This, yes, sir. No, I did not say we can't edit anything. I only said you can only report the turnover on which the taxes have been paid or the input tax credit availed. Okay, we'll come to 9 also. Now, so the 9C is derived basically books of accounts and the audited financial statements. So comparing both, my 9C is derived. By the way, screen there is not getting refreshed. So I don't know, online people are. Okay. Now let's understand GSTR 9. So you got that the context of your 9C is what liability to be paid has been paid or not. That's the context. Now let's look at GSTR 9. Now you may ask the question, okay, why 9 and 9C, both the forms? By the way, do we have had this concept of annual return erstwhile? The answer is no. Earlier under VAT, we did not have this annual return concept. We only had VAT 240, which is audit. That's not annual return. Annual audit, which is equivalent to 9C. So what is 9 now? Like if I have to look at the earlier, which was CA certified. So SSC is ultimate way to correct. Like 9 is your ITR 6 and 9C is like your 3CD, 3CA, something like that. Now the 9 is the one which has been designed to say, okay, for the full year, what is my liability or what have been the taxes that needs to be paid. 9 is kind of taking the source from various places, books of accounts, GSTR 1, GSTR 3B. Now, books will say 1 crore, GSTR 1 will say 10 crores because some error happened, GSTR 3B will say 80 lakhs. Finally, what needs to go into 9? What needs to go into 9 is the turnover on which the taxes have been paid. If you have paid taxes only for 50 lakhs, now there is a new number that's coming. All this while it should be a number between these three, either 1 crore or 10 crore or 80 lakhs. But if you have paid the taxes only for 50 lakhs, what goes into GSTR 9 is 50 lakhs. Right, this is a fourth number. Now, am I confusing? That's a question that would come. So it's an opportunity now to look at that, okay, what is the right turnover on which the taxes needs to be paid? And if there is a difference, that is where I will be reporting here in my annual return. So annual return, like we have 5 parts in GSTR 9C, we have 6 parts for GSTR 9. These table numbers are also very important because you need to know which information to be reported where. While filing your annual return, you have to quickly get, okay, this has to go into this table. Let's leave part 1, which is basic information. Part 2 is about liability, capturing your turnover and the liability. It has 2 tables, table 4 and table 5. So my total turnover, I will split into 2 categories. The turnover on which there is a liability, I'll put it into 4. If there is no liability, I'll put it into 5. So my turnover is divided into 2 parts, table 4 and table 5. After my liability, the obvious thing comes as input tax credit. It has 3 tables, table 6, 7 and 8. Table 6 takes the gross input tax credit that I have availed. Gross input tax credit that I have availed. Table 7 is the credits that I have reversed. So 7J is the net input tax credit. Then why table 8 is where they would expect a reconciliation statement between the credits that you have availed, which is there in GSTR 3B, versus credits ought to have been availed, which is there in GSTR 2A. So the government wants a reconciliation statement that's given in table 8. So we have looked at liability, input tax credit. Obviously, the obvious things that should come is tax payable and paid. So that's a part 4, the tax payable and paid, which is table 9. There's only a single table, the tax payable and paid. Ideally, my GSTR 9 should have been completed at this. With my part 4, the GSTR 9 should have been completed. However, we know once a return file, it cannot be corrected. The only way you can correct it is in the next month. If you have short paid, pay it in the next month. If you have excess paid, adjust it in the next month. Where is it given? Is it somewhere there in the law? Law only says section 39 and 37. If you are finding a mistakes, please correct them by September of the next financial year. Method mechanism, neither it is there in the form nor in the rules. But we have a circular 26, the last one of 2017, where they said you can adjust in the subsequent financial year. So that is where if you have carried over some adjustments to the subsequent financial year, though pertaining to this financial year, so you need to know what is the values. So this is where the system comes looking for handy, that if you say that I have paid the taxes and reporting here, now the system is going to compare. I'm not finding this neither in your DRC03 or your GSTR 3B. So it looks like you are fooling me. So it will automatically send the notice. So that is where you need to know which information needs to be reported where. So if you have paid the taxes correctly within the financial year, you will be reporting it in table 4, which is part 2. If you are reporting the turnover or paying the taxes in the subsequent period, you would be reporting it into part 5, which is table 10. This is something one should be very much aware if you want to avoid a notice. Now, see, no business can run without getting a notice. Notice doesn't mean that something fraud happened or something wrong. It's just that the officer did not find things correctly. There is a mismatch. So he's seeking information. Notices cannot be avoided. However, you don't need to invite notice by putting a wrong data. See, you have paid the taxes, but it is paid in next year. So instead of reporting it under table 4, you should be reporting it under table 10. You reported it, right? So likewise, you availed credits properly, but you have availed it in next period. You have reversed the credit properly, but you have reversed in the next period. So when you know that this is what I have done, but I have done in the subsequent period, you got to report it into part 5, table 10 to table 14. 10 talks about the taxes that you have paid in the next year. Table 11 talks about the taxes that you have adjusted. Like this year I have paid extra, but next year I have adjusted it. Table 12 talks about the credits that I have availed erroneously, but I have reversed subsequently. Table 13 talks about the credits I forgot to avail this year, but I have availed next year. And table 14 is table 10 minus 11, the liability on which the taxes have been paid. So the liability which is there in table 4 plus the liability which is there in table 14 will be the total liability. Now some of you are wondering, where is this on the screen? That's where I'm saying that this one should be aware of. So system is going to capture all this and do the notice management. Then additional information which they want to capture, that's there in the part 6. From table 15 to table 19 is the additional information. So broadly, if we have to say GSTR 9 and 9C, this is what is expected. First way of you finding it confident is knowing the context and knowing what information has to be put where. Knowing the right information that needs to go in is very important. So understanding these tables and the right data getting in will save you a lot. Right. So let's move on from the issues on supply and input tax credit. Firstly, supply can be anywhere. So while you are finalizing your tax audit report or the financial statements, the obvious thing one would look at is the credits of the P&L. That's the obvious thing that one would look at it. But by understanding the nature of the business, there would be recoveries, reimbursement, and there would be an accounting practice where we offset the recoveries with my expenditure. So let's say printing and stationery cost is recovered in the bill. So the credit of it, instead of recording as other income, I will credit it to my expenditure. But for the purpose of GST, even that's also supply. So the analysis has to be done where all the supplies under GST is lying in the books of accounts. Because that appropriately I have to report it. Where do we report? table 5 of 9C. My books of accounts turnover is X, but the turnover for the purpose of GST is something else. Or the asset side of the balance sheet. I've sold fixed assets. What comes in my P&L is either profit or loss. But what's there for GST is the gross value. So my asset depreciation block, if there is a removal of a gross block, that's where I have to capture an item that would be coming up for the supply. Or on the liability side, advances received from the customers. It's there in the balance sheet as a liability. But for the purpose of GST, it is a revenue. For the purpose of books of accounts, it becomes a revenue when I raise an invoice against it and offset. So your supply can be all over the place. So you have to map it that, okay, P&L credit is only so much, but where all from the debit, there can be something coming, or my P&L credit has profit on sale of asset, remove that profit on sale of asset, add the total sale value. You got to do those adjustment and reconciliation and first freeze the turnover, freeze up the turnover. Now, there are various issues industry specific that would be coming. There are various issues the industry specific that would be coming. Certain things which are in schedule 1. Financial accounts is maintained basis there is a financial value. If a customer comes and drinks a coffee, definitely it is nothing to do with the books of accounts. But however, that I am offering something free to customers or something to someone where the input tax credit has been availed, they are deemed as a supply. So I'm not talking about a coffee will be treated as a supply, but you are giving some gifts and you are availing input tax credit. Or the classic example is branch transfer, because under GST, each state is like a country. Goods moving out from the state or coming into the state would be looked from the supply perspective, even though it's our own branch. In the financial accounts, there is no revenue because it's my own branch moving from one place to another. Or you might have a cost plus scenario. For example, my office in Bombay, my Bombay branch will undertake the assignment, but the assignment is executed by the Bangalore branch. So I need to do a cross charge for the time efforts which people are working here. I need to do a cross charge for the revenue that is generated there, the costs which are there here in this branch. Right? So be it goods which are physically moving or the services that are there. Or it could be an issue where the classification itself is a challenge. Different industry like printing industry, when I print a pamphlet, now is it a job of service or is it a supply? Will it come under chapter 99 or chapter 49? You go to a Kodak photo studio, give a pen drive and ask them to print some photos and give it to me. Is he supplying the photos which is goods or is it a service? I am going to the same printing press and giving him some content and say that I need 1,000 leaflets. Right? Is it a service or a goods? Now, paper also I am supplying, he is just doing printing, will be one situation. I just gave the content, but he is just printing on his paper and giving would be another situation. So, industry specific issues would be there. So, while finalizing your books of accounts, you should ask the question to the client saying that, are there specific issues? Because most of the times we are not an experts in classification. And every industry has an association, they take an opinion and look at it. And the valuation, unless otherwise explicitly provided, whatever is the value which is there in the invoice has to be treated as a value. Provided they are not related parties, provided the money is the sole consideration. But if you are doing an exchange of old battery and giving a new battery and reducing some 5,000 rupees, so you need to add that as a value. It's like you give an old phone and get a new phone. So again, the next question which needs to be asked, are there any valuation issues that would come up? can I just take the values which are there in the invoice as a straight the value, or should there be any adjustments that needs to be done? So these are the questions that we need to ask, list down, and if it is null, null, otherwise we can move on. Then the debit notes and credit note adjustment. Credit note, I'll come back once again. Then certain things which will be an income for the books but not be for GST. So things which we also need to keep in the mind. Like if you are doing a proprietor's return, he has an income from immovable property, rental income from immovable property, or he is having a salary income. Now, most of them, the rental income, if it is residential, it is exempt. So it's not even reported anywhere. But it is for the purpose of IT return. So I have different head: income from house property, income from salary, income from business. So from the tax audit, we are only looking at the income from profits or business, right? But for the purpose of GST, all these incomes have to be considered. So while computing the liability, the turnover, even though it is an exempt, you need to have a wisdom or visibility of all the incomes that are there. Like in a partnership, if a partner is introducing something as a, of course, if a partner is registered, I'm talking, he is introducing some laptop or an assets as a capital contribution, it is like a supply. Something is getting credited to his account as a capital, but it is a supply. So certain things you have to look at the beyond the books. This can come only by asking a question. So right questions is that, is this all, or is there something which are missing? And there are specific issues to industries on other income. What is the other income? Most of the times these other incomes are not reported for GST, but it is there in the P&L. Why do you get this other income? He says, sir, my supplier has given a credit note. Now, I did not sell anything to him. I have purchased from him. He has given me a credit note. Why did he give a credit note? Because year-end sale has come. I have to move the stock. He said, you sell this stock, I'll give you 50,000 rupees extra credit note. Now, what did you do? I have put some offer, the year-end Christmas, New Year offer, I have sold the stock. But if you see, why did you give the discount to the customer? Because you know the supplier is giving you a credit note. Now, the way you would be treating is, see, I did not sell anything to my supplier. So there is no GST that would be applicable. Nor has he given any GST in the credit note, nothing. He says, in the next bill, which you have to pay me 5 lakhs, reduce this 50,000 and pay it. Bill you have accounted as 5 lakh rupees, payable 5 lakhs, but you paid only 4.5 lakhs. You got to close this account, 50,000 creditors written back, miscellaneous income, discount, incentive, something is added to P&L. Have you paid GST on it? No, that's not my sale, I have not paid. Right? So these are the questions that would come up. But technically, it is a supply. It's like you sold something to customers with a 50,000 discount, expecting it to be paid by your supplier. So technically, it has to be added to the sale value. So this is the common mistakes that happen. But there could be some genuine credit notes. It's like if your supplier says that, okay, see, the target I am giving to you is 5 lakhs. But if you buy more than 5 lakhs, I'll reduce something in the price, but you buy it. He is forcing to reduce his inventory. So purchase related incentive that has come. So I have got the incentive for buying more. It is like when you buy something on the credit card, you get some miles. So credit card miles, those points. So you are getting it for buying something. Now that has nothing to do with your supply. You may sell to the customers with a discount, without discount, whatever. So there is no bearing on your supply. Now these are the critical things that happen, and most of them do not consider this for liability. And the issues that would come up is 3 years later, 4 years later, after the audit. Like now most of us are attending to GST audit notices for financial year 17-18. Now itself everyone trying to understand, okay, what information has to be reported where. Now if the information that is being reported in 17-18, where the law was new, with a different understanding, with different speakers giving different views. So, and the best what the SSC understood, the taxpayer used that view and he has paid. Now those issues that would come up. So there are like other incomes which are there in the P&L where the taxes have not been discharged. So make an assessment with whether GST applicability would come on it or not. So ask a question for yourself and the SSC that, okay, where do I report, whether the liability would come up to it or not. The other issues could be the wrong taxes discharged. Instead of paying IGST, I have paid CGST, SGST. What's the right way of doing it is pay IGST now, claim a refund of CGST, SGST. That's the right way of doing it. Now, someone says, no, I don't want to do it. I want to litigate and keep it. Okay, it is their call. For them is like, see, I have to pay 18,000, I have paid. Now I don't care whether it is IGST or CGST, SGST, I have paid. Now don't ask me to pay 18,000 in this head and claim a refund under that head. All right, so these are you'll find these issues also. So firstly, you grossly ensure that that has been taken care or not. And thankfully, for these wrong taxes which have been paid under a different head, there is no time limit. The refund claiming time limit is only 2 years from the date of payment of taxes. But for these wrong taxes paid, whenever you are correcting and paying the right taxes, you will be making a claim of that taxes from that period. But for filing GSTR 9, now you got to be very careful, where do you report? Since I have paid 18,000, 9,000 CGST, 9,000 SGST, in my table 4, would I report it as 9,000, 9,000, or would I report it as 18,000? That is a question that one has to answer. Then taxes which have been short discharged, like I have to pay a tax of 18,000 rupees. I have paid a tax of 15,000. Now what do I do? Can I now pay it in the annual return? How much do I report in my annual return? Do I report 18,000 or do I report 15,000? The answer to it is, are you going to pay the taxes now at least? When I say, like, how do I pay now? DRC 03, DRC 03 annual return. If you are paying the 3,000, then you report it. Now, where do I report it? I report it into table 4. I report it into table 4. But if you say, yes, I acknowledge that I have to pay 18,000, I have paid 15,000. What about the 3,000? Next year I have discharged. Next year is when? Let's say in May. May 21 I have paid it. May 21 I have paid it. Then where do you report? You report it into table 10. Now you notice that the values are going into different tables based on your different actions that you have taken. If you have not even paid anything, what you will report is only 15,000. 15,000 will be in table 4 because last year in 3B you paid only 15,000. Now 3,000, if you say that I am paying through DRC 03 annual return now, it will be going to table 4. If you say I have paid next year, it would be going to table 10. If you say I am not paid and I am not going to pay, you will only report 15,000, even though books of accounts are showing 18,000. So hope there is a clarity that the values where to report and how to report. Likewise, if you have excess paid, you are supposed to pay a tax of 18,000, but you pay 20,000. Now the question that you have to ask is, have you claimed a refund of it? Like, have you claimed a refund of it? Now that's where you have to ask. If the answer to it is yes, that yes, okay, I made an application to the government and claimed a refund of it. In your table 4, even though you have paid 20,000 in 3B, what you will be reporting is only 18,000. Now you may say that, okay, I have said that what gets reported in GSTR 9 is the turnover on which the taxes are paid. But the taxes are paid is 20,000. Why am I reporting 18,000? Since you have already applied for a refund and the refund has come, the net tax that actually you have paid is 18,000. So what goes to table 4 is 18,000. But if you say, no, I have not claimed the refund, but I have adjusted it in the next year return. In the next year, I have adjusted it. Then your table 4 will be 20,000 rupees. In table 11, you will be reporting 2,000, saying that next year I'm going to pay lower taxes because I have paid an extra, which is what I'm carrying forward. So you got to have that wisdom of how do I report the carrying of the numbers. And that's where I said these table numbers you should be knowing, because I'll be using the table numbers. So that's why I've spent time in explaining what tables go, what information goes which where. So table 11, if you have adjusted in the next year, if you have claimed a refund or you are applying for a refund of it, then it would be going to table 4 itself. You did nothing, then you can leave as 20,000 in table 4. But the same transaction, you can now find that it will be coming in a different place or different ways of reporting. When it comes to supply, okay, taxes are okay, but I made mistake in turnover, whether it in GSTR 1 or GSTR 3B. What mistake you have done? I have a lot of customers which are B2B, but I have reported as only B2C. In table GSTR 1, B2C is table 7, B2B is table 4. The tax for the purpose of 3B is the same. Okay, can I correct it? You do a right reporting. Your 4A and 4B of GSTR 9, table 4A and 4B, you have B2B and B2C classification. Do a proper classification of it. I have made exports without payment of taxes, but I forgot to take LUT. Okay, it's some procedural lapse, but something happened. Report it as exports without payment of tax because you have not paid the tax. Instead of reporting under table 4, you will be reporting it under table 5 because there is a turnover on which there is no tax liability that occurs. So turnover on which the tax liability occurs will be in table 4. The turnover where there is no tax liability will be in table 5. Or you have a situation where that I did not disclose any of those exempt, nil, non-GST. It is there in my financial statements. I did not report it in GSTR 1 or 3B. What do? Report it now in your GSTR 9. Technically, after you file your GSTR 9, your GSTR 1 and 3B has no value. After you file your annual returns, your 1 and 3B has no value because 1 and 3B had issues. That is why you are correcting them in 9 and putting it. Now, if an officer says, see, in the month of August, your turnover was 10 lakhs, but you reported only 9 lakhs in one. Say, yes, I acknowledge that I made a mistake. That's what I've corrected now in the 9 and I'm paying with the interest. Right? So that is where the 9 finds a huge place. So 9 is not a merely compilation of information or a reconciliation. It is about calculating the right turnover. If I have to say, how do you simplify your 9 and or tips and tricks, if someone is saying that there's no tip and trick, assess forget what is there in 1 and 3B, look at what needs to be done, recompute all the liabilities. So whatever has been done, you deduct it, then do the reporting. So when you do that classification and reporting, you will be having those adjustments. And you will also have this Ind AS adjustment or something reported in other comprehensive income like lease equalization reserve or interest amortization. All these things, don't worry, you can report it as no supply. So 5F of GSTR 9 has no supply, put it under that head. These are not supply. So that way, at least you are attending to all items that are there in the P&L. The moment you attend everything, every item in the P&L, then you are more confident about your annual return. So annual return, please treat it as a place for me reassessing what is the liability for the period. One thing which I want to tell you about credit notes, which I didn't discuss earlier, is technically section 34, if you have to treat that as a credit note, you should be reporting it as a credit note. You should be reporting it in your GSTR 1. But most of the times what happens is you don't report the credit note. But in GSTR 3B, you will adjust it and pay a net liability. Again, a litigative subject. Issued a credit note, but did not report it in GSTR 1. How do you know the other person has reduced liability or not? Okay, get a declaration in your GSTR 9, say that there are so much credit notes. Now, the advantage which you have is even this year, the relaxation are there where the debit notes and credit notes can be netted off and presented. So you can use that advantage and you can present it, but still it is a procedural lapse. You may say books of accounts, credit note. Why sales goods return happened or some damage, shortage, quality, adjustment. Have you issued document? Yes, document is there. Have you paid the lower taxes? Yes, 3B, I have adjusted it. But the point is, did the recipient reduce his credit? I don't know because I have not reported in GSTR 1. So that's the biggest mistake many people do it. Yeah. So you also have to reconcile the net credits or the turnover reductions which are done in GSTR 1. That is where I said 9, while you are doing, you need to get a wisdom of what happened in 1, what happened in 3B, what ought to happen. All those things are very important. In terms of mathematical work, how do I do? Just take the books turnover and make those adjustment, stock transfer, deemed supply, all those things, add them, split it into multiple GSTNs if there are GSTN IDs. It's like as a working paper, where do I start if someone wants to know? So take books turnover, derive from books turnover, derive GST turnover for making all those adjustments, stocks, transfer, deemed supply, all those adjustments, increase, decrease, make those adjustments and arrive at GST turnover. After arriving, split into GSTN wise, because in the books, there is no GSTN wise, it is only consolidated. And generally only the large corporates you will find multiple GSTNs, but otherwise majority 90% of the population will have one GST and one financial statements. But if there are multiple GSTNs within the financial statement, split that. After splitting, you said, okay, this is the turnover. Get the turnover, this turnover into taxable. If it is taxable, how much? 12%, 18%, 5%, put it into rates. If it is not taxable, why is it not taxable? It is exempt, nil, export, zero rated. Put it, bifurcate into the various categories. So down section will not have any tax liability. The above section will have a liability. Yeah. Yeah. This one. Yeah. Yeah. So now the question is, I have made a supply to SCZ, which is an IGST. Supply to SCZ is IGST. In this case, the taxes have been collected from the SCZ also. But he has paid the taxes as CGST, SGST. So in the GSTR 9, how do I report it? Now, the point here, so this is a good safe, at least the taxes you have paid. So in your view, you are treating it as CGST and SGST. You have paid as CGST, SGST. In 9, you will be reporting it as CGST, SGST because that is what your view. For you, you are holding it as DTA. Like SCZ is also in Karnataka. Let's say 2929 is the state code. You didn't know they are in SCZ. So you have paid CGST, SGST. So you held it as CGST, SGST. You paid CGST, SGST. You report it as CGST, SGST. So having segregated, yeah. No, see in 1718, while the migration happened, not all SCZs have been categorized as SCZ. So now, the moment you enter an SCZ number, system will not allow you to pay CGST, SGST because they have been mapped. So this for a limited period you had this issue that happened. Yeah, so you segregate, having identified the turnover into GSTN wise you identified, then yeah, having identified the turnover GSTN wise, you segregate it into rate wise, taxable, non-taxable, and which rate you segregate into those categories. After segregating into the rate wise, you arrive at the tax liability and see whether that have been paid or not. So that's kind of your working which has been done for your output. Any doubts on the output before we move on to ITC? Any questions that are there in the online on output? It is not exempt, it is zero rated. Yeah. See, the difference between zero rated and nil rated, zero rated means there exists a rate of tax, but the rate of tax is made to zero by fulfilling certain conditions, like you exported or given to SEZ. The rate of tax exists for those products. So from the beginning, supply to SEZ is zero rated and it is interstate. No clarity, please correct audio. So, okay. Loan received from director is written off whether GST is applicable. So from Ganesh, see, GST is applicable only on supply. Anything supply, it has to fulfill section 7. In a common man understanding, supply means I have delivered something or agreed to deliver something, say sold or to sell. You brought it here, is this to the screen? Ashana question on then. Okay. So the written off of director's loan is not a supply. Okay, let's move to freezing of the ITC. There are 3 tables, part 3, table 6, 7 and 8. Table 6 talks about input tax credit availed. Now availed is as per 3B. So I have cut it off. Reversal as per 3B, and table 8 is reconciliation with 2A. Now availed means I have availed. I have taken to my electronic credit ledger. I have taken it to my electronic credit ledger. So let's see why I have cut it off as per 3B and what is the right way of reporting it. Let's understand what is there in my 3B. Table 4 of 3B talks about input tax credit that needs to be availed. 4A is gross credit, further divided into 5 buckets. 4A1 is import of goods, A2 is import of services, A3 is RCM, which is domestic, A4 is ISD credits, all other credits. That's the favorite table. All our ITC goes into that. Reversal of credit happens in 4B owing to rule 42 and 43 is 4B1, others is 4B2. The net credit which goes to electronic credit ledger is 4C. If I have any ineligible credit, I report it in 4D. So what is my total credit at a gross level? It is 4A plus 4D. My credit at a gross level is 4A plus 4D. I have made a purchase. If it is eligible, it will goes to 4A. If it is ineligible, it goes to 4D. The total credit is 4A plus 4D. The credit I am availing actually in 4A. Ideally, what should go in GSTR 9 is what is there as per 3B. But imagine a situation where I have imported goods. I have paid IGST to my customs. I filed my bill of entry and I paid IGST. Where should I report it in 3B? Which table? When I import goods and paying IGST, where do I report in 3B? 4A, where in 4A? 4A1. But accountant do not know. In the tally in that month, it is showing some 45 lakh rupees credit. He has put that 45 lakhs in 4A5. Does this mistakes happen? Very common. He paid a reverse charge. It's like total credit. He put everything into all other credit. Now, The reporting it in my GSTR 9 again is into similar buckets, like what is there in 3B. It is again further divided into 6B is inward supplies other than reverse charge, 6C reverse charge unregistered, 6D reverse charge registered, 6C import of goods, 6F import of service, 6G ISD, 6H reclaimed credit. Again, this is further divided between input capital goods, input services. Further, this is split between like a matrix CGST, SGST, IGST. So if I have to do a parallel comparison with the GSTR 9 and GSTR 3B. So, Suraj, GSTR 9 and GSTR 3B, these are the tables in GSTR 9, there are tables in GSTR 3B. So the import of goods I should have reported in 4A1 when it comes to 3B. But where did I report my import of goods? 4A5. What do I do in my GSTR 9? Should I continue to report if it is 4A5, it is 6B. Do I now need to report in my GSTR 9 in 6B? Or can I change it and say, no, I made a mistake in 3B. I am reporting it 6E. Can I correct this? Now, by correcting it, are you availing more credit? You are not availing. So, what can be corrected in GSTR 9 is this inter-adjustments. By doing so, you are not taking extra credit. So what you can correct is again in this 4 boundaries. So again, one simple tip and trick is to get what is the right classification that needs to be done. That needs to go to my table 6 versus what happened in 4. Do that reconciliation. My net credit that will be reported, I'm talking about net, not gross credit. I'm talking about net credit that will be reported in GSTR 9 is that net credit that I have availed in 3B. Now let's take another scenario. Credit note received. So I have purchased goods of lower quality. Let's say 1 lakh is the purchase value. 18,000 GST. I have availed month 1, April 21. April 20, I have availed the credit. Goods were not good quality. I have returned back. May 21, I have returned back the goods. What do I do when I return back the goods? I will report it in my 4B2 of GSTR 3B, reversal of credits. How do I report it in my GSTR 9? There are 2 ways of reporting. One, I can report gross value in table 6, reversals in table 7. Possible. That's the right way. That's what I have done. The other way of doing it is, see, it is like the credit that I did not avail. Or the another example you can think of. I was supposed to take a credit of 18,000, but I have taken a credit of 1 lakh. Made a mistake. Mistakes happen. Error is human. If we don't make mistakes, we will be like computers. Now, what did I do? The moment I realized I corrected it. How did I correct? Next month, I reduced. Reduced how much? 82,000. Now, how much credit I have availed? Did I avail 1 lakh, reversed 82,000 and net 18,000, or I have availed 1 lakh? Now, there is no right answer to it. By the way, GSTR 9, what you see in the instructions, beyond that, there are no explanation notes, nothing, no SOP manual, nothing. What's the right way of reporting? So, should I report? Now, my 6B is correlating to 4A5. 6B, if you have to look at the GSTR 9, 6B means 2 slides before. Yeah, 6B means inward supplies, which is 4A5. 4A5 is showing 1 lakh. 4A5 is showing 1 lakh. How much do I report in 6B? Do I report 1 lakh or do I net off that 82,000 which I have reversed in the next month and show 18,000? There is again no right answer to it. There are two ways. You can report 1 lakh in 6 and report the reversal which happened 82,000 in table 7. Or you can report only 18,000 rupees in your table 6, because in your view that is what the net credit that you have availed. By the way, if you try to play mischief with the system, they have designed very beautifully. Your 6A, it is an auto-populated figure which will show 1 lakh. 6A is an auto-populated figure which will show 1 lakh. The moment you report 6B as 18,000, your 6I, which is total 6B to 6H, will be showing 18,000. But there is a difference which is right next to it will come up. Again auto calculated. Your 6J will show 1 lakh was there. Your 6J will be showing a negative, 6J will be showing a negative 82,000. Don't worry. In table 7, system would be expecting 82,000 reversals. You are not reporting a reversal. Your 7J will be showing 18,000. What is the 4C, the net input tax credit that you have availed? A cumulative 4C of all the 12 months will be 18,000. So the another thing which while you are doing input tax credit reconciliation, you got to put this month over month, make a summation of it and do the reconciliation presentation. Now you may ask the question, would there be any difference if I show 1 lakh and 82,000 and 18,000 or 18,000 0 and 18,000? Is there any difference? Anyhow, I'm showing the net credit 18,000. The difference is what is there in 2A? 2A is only that 18,001 purchase. You erroneously reported as 1 lakh and reversed it 82,000 and availed 18,000. Right? So when system tries to compare, that's where the next table 8D, it will say that, okay, you have taken excess credit. 2A has 18,000, 6B is 1 lakh. So you have availed an extra credit. So you'll again get that law letter. Now nothing to worry. Your answer is there in table 7. See, as long as you have a valid explanation, even 1 crore difference is there, nothing to worry, because you have an explanation to do. If you do not have an explanation, even 1 lakh difference is something to be worried of. So the right reporting can also save you in automatic notices that will come up. Now let me explain you, if someone is trying to fool the system and report a higher credit or a lower credit. If someone is trying to fool the system and report a higher credit or lower credit. Let's say I have purchased motor car and that is an ineligible credit. Now I want to suppress it. Or even more simpler example, I have availed 1 lakh when my 2A was showing 18,000. Right, that's the example which, let's continue with that. Assuming I did not reverse 82,000. Assuming I did not reverse 82,000. Now in my annual return, I want to hide it. If I report only 18,000 in my 6, my credit which went to electronic credit ledger was 1 lakh. Since I did not reverse it in my 3B, I cannot reverse it in my GSTR 9. Saying that it was ineligible credit or credit doesn't belong to me. System will generate a notice. Your credits there is 1 lakh, what you are reporting is 18,000. Let's say, no, okay, I want to avoid the credit. I will move for, instead of putting under 6B, I will put it under 6C or 6D. If you put it under 6C or 6D, it is a reverse charge credit. Reverse charge means you should have paid the taxes. You should have paid the taxes. The tax payment should be there in table 4, 4G, the right table. So there is no tax liability, but you are availing a credit. So when you fit that 82,000 here, again you will get a notice. Let's say you put it under 6E imports. Today, 2A will capture the import of goods. 17, 18, 18, 19, when you downloaded, it was not there. You didn't even know if customer was saying that, okay, import of goods is 5 crores and IGST paid on that is, let's say around 1 crore. You have no mechanism to check whether what he is saying was correct or not. He will give you bill of entries. You try to enter that bill of entry on IceGate portal. So one by one, no one knows the right link. But today, if you download 2A of 1718, July 17, when you download today, you will get the bill of entry details. So system now knows if there are import of goods, system knows. So if you put it here, it is not there in IceGate portal, again you will get. Let's say you put it under 6F, but again it is a reverse charge liability, taxes should have been discharged. So you'll be caught. You'll say, okay, I'll put it under 6G, ISD credit. But for ISD, someone should have filed their GSTR 6. That should have been reported in your part B of 2A. That's not there. So if you try to force fit an excess amount or a short amount, you will get a notice. So if an ineligible credit you have taken, you cannot reverse it here. If you want to report an excess credit, let's say 2A has 1 lakh rupee, but what I have availed is only 18,000 rupees. Now I'll report 18,000. Okay, sir, now I'll report 1 lakh. You report. System will say there is a mismatch. But just because you reported in your GSTR 9, it is not going to add to the electronic credit ledger. So, reversal of a credit or reporting of a credit is not permitted under GSTR 9. You cannot do it. Okay, what can I do? I have taken an ineligible credit, which I want to reverse now. No problem. DRC03, please reverse it through DRC03, pay appropriate interest and report it under table 7. So system will say that, okay, look, you are showing some reversal. Where is the reversal? That reversal, you will be finding it through DRC03. So you have a valid explanation. So what is the mantra for simplification? Is reconciliation. Having what is done versus what ought to be done is the important thing. The one working like how you have done for the turnover detail, for the input tax credit, expected and worth doing is segregating your expenditure, both capital and revenue, the line items with GST and without GST. And if it is wherever GST is there, asking a question whether it is eligible or ineligible. There's something where there is no GST, asking why there is no GST. Is it from composition trader purchase, or is it an small URD purchase, or is it an exempt or nil rated GST? Or very important question, is it a reverse charge purchase? You purchase something from a dealer where you are supposed to pay, and over the period the line items in reverse charge have gone many, and many people are not aware. Like say I avail a security service, so it is under reverse charge. What generally reverse charge people know still is GTA and legal. The moment you say reverse charge, these are only two things that comes to mind, but there are many reverse charge that would come up. Input tax credit, which is availed, you have to check the eligibility is based on end use. If the end use is taxable or zero rated, it is available, but it is other items, it is not available. So these questions that needs to be asked. Time limit is simple. So let me explain table 8. Okay, there are other things, even though for business purchase, if it is not the credit that you can take, it's a blocked credit, you have to go forward. Next, 2 more slides. Yeah. So if you have errors in ITC excess availed, if you have reversed in GSTR 3B, that is permitted, you can show it in GSTR 9. But after 2000 September 21, the time limit is over, it has to be done through DRC 03 only. And how do you correct it in GSTR 9? You will report it in table 7 by paying through DRC 03 annual return. Sometimes people would have made a mistake showing it as a liability. This is like I have made a purchase, I have returned. Now, instead of reducing my input tax credit, people pay taxes for it. Report it under table 3 and pay taxes for it. Again, it is like excess payment of taxes, which is not the right way. So you have to, right way is you claim refund of the excess payment of the taxes, and what needs to be done is you pay through DRC03 liability. In case of a short avail, you can always avail till September of the next year. So permitted. If you are availing it in the next period, make sure you report it into table 13. Now, why the reporting under table 13 comes in? Because you are reconciling with your books of accounts. Books of accounts has a figure of 100, let's say 100, but what you have availed is only 80. So when you, so table 6 will show 80, table 13 will show 20, put together will be 100 matching with the books of accounts. So we should know what are the tables I have to consider for reconciliation. Like knowing these table numbers are very important, because end of the day, once you are doing your tax audit, you are signing off some numbers, those numbers have to be classified where in my GST I'll put it appropriately. After September, you cannot avail it, it is like gone. See, I will, okay, the question is, can the teaming and leading is permitted? Now, my answer to it is 3B do not have any explanation. If you say that, yes, I have availed in April, so you have availed in April. If you say I have not availed in April, then you have not availed in April. So what you say is matters, and that is where reporting that value in table 13 is very important. But one thing which you have to check is if you are reporting it in table 13, that figure should be there at least somewhere between April to September of the next financial year. Like mere reporting in 13 and putting it into October of the next year is where you will be inviting a trouble. That is something you have to be careful of. So how do I reconcile with my books? My table 7 plus table 13 minus table 12 should be the value that would be there in the book. So this is a kind of a mathematical formula. You need to have a reconciliation. The issues that are always there is, do I need to reconcile with the 3B or the books of accounts? Next, the ITC is available in the returns, but not there in 2A. I have availed the credit, but it is not there in 2A. What do I do? Or courier bill of entries. So I have done the import of goods, but it is not showing up in IceGate portal. Purchases made in Mumbai head office, but input tax credit availed in Bangalore. Or other way putting, supplier has given me the goods bill, everything here, but while filing is the GSTR one, he has put it into head office. So credit is available in PAN, but not in GSTN. Please, earlier the better you detect it and correct it. In the annual return, you cannot correct any of this, but at least you can make an attempt to pay the wrong taxes and claim a refund of the wrong taxes paid and make a payment of the right taxes that you can pay. So, or at least make a declaration that, okay, this supplier has paid the taxes but not reported in GSTR1. His time limit to pay report has been changed. So do the paperwork. The Arise India, okay, in GST, let's first get this. Other than that Bharti Airtel, which is of Supreme Court, no other matters which can be actually quoted. All right. It is a law which needs to be tested. 90% of the SSCs are still with the proper officer. Tribunals are not there. So we are only going to High Court on a writ. So all the case laws that you get are of earlier period. Should be VAT, excise. Next point, are they valid under GST? Needs to be tested. Because GST law has been evolved basis the old principles. So that is why I choose not to talk much on case laws, because the question that can come up is, okay, it's a matter of excise. Excise wordings is different from what is there in the GST. So at this point, we should be restricting ourselves that, okay, we win on any settled matter under erstwhile law. the answer could be yes or a no. There are many issues which are there settled in the earlier laws, but again you have to test. Even here in Madras High Court we have where the 2A is the not the proof, the you first catch hold of the supplier, but still nothing of that is settled. In fact, as recent as yesterday, there was RWA where the advanced ruling said no, above 7,500 means everything you have to pay. In spite of we have the High Court judgment. So as of now, the court judgments are still not the final verdicts. Okay. See, the impact of the input tax credit reconciliations on 9C is also very important, because in table 12 of 9C, we give the reconciliation, whatever I have shown earlier, we give the same reconciliation in 9C. So make sure that the both data stock same. Like in the tax audit report, if you say the SSC did not maintain stock register, nothing, but in GSTR 9, you give HSN wise, rate wise bifurcation. So it is like kind of anomaly. So same report which is there in table 12 of 9C, but when it comes to GSTR 9, you are not reporting those values. So that would be an anomaly. So make sure both have same thing. Sometimes you have taken an input tax credit which do not belongs to your state. Like say you have stayed in a hotel in Bombay, you are in Karnataka, the in place of supplies of the Maharashtra. From the system perspective, that credit is not eligible for you. If you have taken it, you cannot now undo it in 9. So that's a matter of litigation, nothing can be done. Technically, system will not allow, and in my view also it will be an ineligible credit, but people can test it, it can be, so you will have these issues. Next, segregating between input services and capital goods. Is it mandatory? My view is you have to segregate and give. It will be good for you. Portal expects you segregate. Even if you don't segregate, return can be filed. Earlier, first 2 years, everything was relaxed. Next, they said capital goods you give. Even this year, capital goods has to be given. Input services can be merged under inputs. But why should you segregate? Now, if you notice, the systems have been designed to send notices. Notices for what? The tax paid ratio is like, how do I find out your profit ratio? Input tax credit utilized versus tax paid in cash determines how much is your profit. Basically, it's GST is a value added. The higher the value, higher the taxes gets paid through cash. But if you are not paying through cash, it means you are paying through input tax credit. So is it a margin lower? Answer is no. I have a capex purchase. What's the proof that there's a capex purchase? By reporting it in your GSTR 9, segregating it into capex purchase, you will be getting it. But you may say, no, my systems are not evolved that I captured the input tax credit. My input tax credit is matching, but I'm unable to segregate from the system. Now, the best thing, GSTR 2A is available vendor wise, or the credits available vendor wise. You know, most of the vendors, which are material vendor, which are service vendor, which are capital goods vendor. One simple pivot table can give an answer to it. An attempt can be made to report it in that manner. The moment you do it, you are again simplifying the job, because there is an external data that can be relied, and you're also avoiding some notices. Trust me, you will get notice if the profit ratio that you are showing is a lower. There are circulars which have been issued in some states. If these parameters are not met, pick it for the audit. It's like circular has been issued saying that these are the parameters I'm looking at. How much is the taxes that have been paid in cash is one of the thing. The next thing which is coming is on the reversals. So people reverse, but they do not pay interest. So again, pick it up. These are all easy cakewalks. These issues I have discussed here. Freezing of RCM, very important. Look at the purchases. The changes in RCM provisions have happened multifold. When it was then, it was very simple, but now the list of services have gone up too many. What I have put it into bold blue color is something which is common apparently. So when you take the expenditure wise, you can easily pick it up. But make sure these are the expenditures that are available where the input tax credit is not there. So it's an easy thing. One should walk through. So much reverse charge liability needs to be paid. Goods, very few people will have a reverse charge liability. And whatever the reverse charge liability that you are showing as an input tax credit, that should be less than or equal to reverse charge pay tax you have paid. Credit you are taking in table 6C or 6D, but you are making the payment under 4G. So that is very important, that the tax paid, is it higher than what is there? So after preparing your GSTR 9, you have to have your internal reconciliation that am I filing a right data or not. So that is where I'm saying getting the confidence on the whole of the form is also very important. The last thing, if I have to talk on GSTR 9, is table 8, which is reconciliation with 2A. See, most of the time what we do is 3B versus 2A reconciliation, right? Whatever the credits I have availed, is it there in 2A or not? But what is expected is 2A versus 3B reconciliation. Now you may say, isn't it the same, 2A versus 3B and 3B versus 2A? Answer is no. 2A versus 3B is government is expecting its reconciliation. What do government has? Government has 2A data with them. They want to know what did you do with the 2A data. Like if I have to put those lines into multiple buckets, there are so many lines. Some of it you have utilized, you have availed credit. Some of it you did not avail it. Why you did not avail it? Either you forgot or it doesn't belong to you. It is ineligible, either of it. So that is why I did not avail. So park it under your 8E or 8F. Okay, those credits you have availed, explain. Now, how much you have availed is visible. It is there in 6B. How much to avail is auto-populated. How much you have availed is there in your 6B, which is coming to your 8B automatically. If you have availed extra, let's say, if in this example, 8A, which is available in 2A, is 200 rupees or 200 lines. What you have availed in 6B is, let's say, 160. What you have availed is 160. And something is ineligible, but you have availed. That is also coming from 6B, is 20. So put together 180 you have availed. And you are also reporting in your table 13 that 40 rupees is missing, I'm availing in next month. Then 8C you will be reporting 40. So 160 plus 20 plus 40, which is 220. So 20 rupees already extra availed. Your 8D will be showing a negative 20 because 8A is, it is expecting 200. You have already availed 120. So 20 rupees you have availed extra. On top of it, you are saying that, okay, there is 35 rupees credit, which is missed out, I did not take, and 45 rupees credit, okay, it is ineligible, do not pertains to me. You are reporting in 80 and 8F, which means in nutshell, you have availed 100 rupees extra, 20 in 8D, 35 here and 45 there. So you'll be getting a notice for 100 rupees. So if your 8D is negative, it means you have availed an extra credit. If your 8D is positive, there is a credit that is lapsed. Credit available in 2A, but you have not taken it, right? So you have to pay an attention to this. If 8D is positive or negative is very important. Yes, sir. Right. No, you have to go forward. You are going back. Okay. So now the next question which we have is, see, I have a credit, let's say 100 rupees in my GSTR 2A. This year, what I have availed is 120. Does it mean that I have availed extra this year? Answer is yes. But is it ineligible? My answer is, last year I have missed out 20, which I have brought forwarded and utilized this year. It was there in 8C of the last year. It was there in table 13 of the last year. What can I do now? This year 8C, you can have a negative value in your 8C. This year 8C, you will adjust the opening to be carried forward and current year to be carried forward. Net figure of it you will be reporting in your 8C. What will happen to my 8D then? 8D is 8A minus 8B minus 8C. So which is 100 minus open bracket 120 minus 20, 8D will become 0. So that's how you can actually correlate and present the right presentation. Hope that answers your question. So what is that you have to check before filing? There are so many tables, so many information. Look at the gross numbers. This 4N is the turnover on which the taxes are paid. See that value are you satisfied with that value or not? 5N, it is after eliminating the reverse charge liability. It is the turnover which P&L credit summation, is it matching or not? Table 4 is only taxable. 5 includes non-taxable. So 5N, is it matching with your P&L credits plus derived turnover or not? 6O is the total credit availed, the gross value. So are you not, you should make sure you are not ingesting a new credits nor taking out something which doesn't pertains to you. 7J is a net credit. So compare with the 4C or the summation of the credits in your electronic credit ledger. If 8D is negative or positive, ask why there is a negative positive, what is the value which is there in 8D. That is a value that will be questioned at a later point in time. If there is a value in table 10 or 11, it means the current year taxes which are being paid is consumed to the previous year. So this year, if I say 100 rupees which is paid, of the 100, I have to park it back something to the previous year. So ensure that the values are correct or not. And sometime do not use that as a balancing figure. If you are using it as a balancing figure, ensure that the taxes have been paid or not, because generally most of them park it as a balancing figure. Don't do that. Better pay it through DRC 03 and make it clean so that at least current year will be having a proper clarification. The input tax credit reconciliation which you report in 12 of 9C should be matched with current year 9, table 12 and 13. So make sure that is taken care of now. Yeah. So these are the key table numbers. Just check before you file and satisfy yourself so that you will be sure that the data which you are filing is proper and complete. With this, we have come to end of the session. If there are any questions, feel free to ask. We can take the questions. Online, some of the questions we have answered. Let's see if there are any questions. Okay, there's a question from Girish. Can we avail ITC related to financial year 2021 in the returns of September 21 filed in December 21? Okay. See, this is a litigative question. Now, lot of notices that are coming basis 16 subsection 4. The time limit to avail the input tax credit is the next year by next financial year September. Due date of the returns to be filed by September, not even September. The straight answer to it is no. But there is another school of thought. So if I have filed my March return itself is late, belatedly. So I have filed it, but I have belatedly. And while filing it late, I have paid late fees, I have paid interest. So I have regularized it. So it should be a valid. Again, the answer to it, plain reading, no officer, neither commissioner appeals will be allowing it, but it should be settled in the court of the law. Next, purchase invoice dated March 21, but accounted in the books and input availed in April 21. Should it be reported in GSTR 1? I don't think GSTR 1 is the right thing. GSTR 1 is a sales related. So the question is wrong. If it is for GSTR 9, it should be reported in table 13 of GSTR 9. That's it. No other questions. Any other questions? Yeah. Okay, under GST for every notice, there are like forms, like you got an ASMT 10, you will be issuing ASMT 11. Your reply is in ASMT 11. If the officer is satisfied with ASMT 11, he will give you ASMT. The challenge would be there. So keep ensuring you look at the notices on the common portal, and if there are any, demand notices that should be attended to. Yeah, so check for whether there is a DRC. So I know, but you have done your job. Yeah. Yeah. Yes, straight answer to it is no. You paid an extra output, you claim a refund of it. You claimed extra input, you paid through DRC03. So it's a time taking working capital the thing. So that's the right way of doing it. But someone takes a litigative view saying that I will fight it off, set it off in GSTR 9. So again, it has to be settled by courts, not by the proper officer goes by the rule book. Unless in the rule book it is given that both are permitted, my view answer to it is also no. Yeah, so question is I have availed credit basis purchase invoice, I have made the payment, all documents are there, just that 2A it is not reported in 2A. Is the credit which I have availed is valid? The answer to it is I don't know. Now it is also again to be settled legally. See, because 16.2 AA has been inserted now, which was not there all this while. You can say that since it was not there all this while, I have to only satisfy these conditions of 16.2. Did I get material? Yes. Do I have invoice? Yes. Has the supplier paid the taxes? He said he has paid the taxes for it. I have endorsement. He has filed 3B. Have you claimed the input tax credit? These are the 4 conditions. You fulfill 4 conditions, can be fought legally. But will the officer allow? Prima facie may not know. But depending on the magnitude, quantum and everything, that has to be fought. Yeah. So the question, another question is, it is there in 2A, but not there in 8A. There are multiple reasons why there would be a difference between 8A and a 2A. Like place of supply, it will be different state. It will be there in 2A, but it will not be there in 8A. People filed late, it will be there in 2A, but not in 8A. So there are multiple reasons why the 8A would be lower. You need to have reconciliations. So that is where I was saying that keep 8D as low as possible. To give a straight answer to this, is the input tax credit allowed, eligible? I have availed it basis the invoice appearing in my 2A at a later point. The answer is yes, it is very much eligible. And this case can be easily fought, and it doesn't need a legal thing. Yeah, so litigations, that is their duty. Yeah. Yeah, I'll put it in little more, add, assuming that you have accounted it in December also. Now, what is the credit? Credit means that is me in the books of accounts or in the returns. So the question is, in my returns, I am showing in September, which is filed in October, but in the books, it is there in the October. Right? In my view, it is still a valid credit since you have accounted. In fact, that is the one other crux of Bharti Airtel, where they say, see, 2A, I was expecting 2A, so that is why my books of accounts are not proper. So that cannot be a valid thing. So what you have done in 3B is the thing. So if you have taken credit means in 3B, not in your books of accounts. Yeah. Thank you, sir. And I thank Bangalore branch and all the participants for attending this session. Thank you, everyone.
Our wholehearted thanks to CA Venugopal ji. I'm sure all the participants enriched from this excellent session. He has wide experience and yes, he shared his practical knowledge. We, on behalf of Bangalore branch and on behalf of all the participants here, for the speakers' valuable knowledge and precious time spared with us. Thank you very much. Our wholehearted thanks to Venu. Please give a big round of applause. As a token of appreciation and gratitude, let us present a small gift voucher to Venu. Friends, please visit bangaloreici.org for all upcoming programs. Bangalore branch election scheduled on 28th of this month. I request those who are interested to participate in the election, please visit bangaloreici.org for all the details and information and participate. Thank you very much. Good night. Please, the snacks and tea, coffee arranged in the terrace, please come and have together.